All right, let's jump into it for a bit of a sort of weekend wrap, a little bit of a review of how the sort of week ended up, and see if we can sort of pick out a little bit of a sort of theme and some trades for the week. Look, I'll start off with DXY, just because we seem to be up on the chart here, and we saw obviously sort of probably the deepest sort of pullback we've seen pretty much since we came off that sort of rate hike back when was that end of September. So I mean everybody's aware of what's going on. This is really sort of pumping up through the highs over here. We are starting to see a little bit of a cooling from, I keep calling it the Trump trade, but it's not really so much just the Trump trade. It's just that, I guess, yes, look, the whole thing you could say as a collective would be the Trump trade, but it was sort of like mainly this last era through here, which was like the post-election, like pump up. I don't know, whatever you want to call it. But, and this has obviously been moving on, moving on. We had that nice little channel. We broke it down. This is very typical of what DXY, and this is what I've been saying all the way along here. If we go back again, I repeat these things every time, I know, but if we see other sort of larger, sort of significant turnarounds, with GXY, this is what I'm saying. It comes down, comes down, comes down, flares right up, and then sort of starts to commit to the downside. If we look at the moves over back in, where was this, last year, so around the end of October, we had that 3 month run up, moving up through the top over here. Same sort of thing, came down, fire back up, came down, fire back up, came down, then actually sort of zoomed right up. Didn't quite take out the high, so it's a little bit different with what we have seen most recently. But, these things aren't sort of necessarily just straight, copy and paste. It's just the idea behind what it can do because it's sort of basically it's such a large market to turn around. We see these things. Perfect example last year. When it gets on a run, it just absolutely crushes everything. And this was a big period here as well, where we'd broken these large supports, we dipped underneath 100, and boom, it just rode it up to the top side here. And this is basically a short squeeze. Um, if we can get a quicker sort of look at this thing here, you can see the pullbacks on these moves very, very shallow through here. And what it's doing is basically just not providing any chance for anybody to get off. You know what I mean? You want to sort of oh, okay, I've shorted it. They'll sort of get on above the highs here, over these highs, stops up here, and it just keeps cruising through and cruising through, cruising through. But we left that gap up the top up there. Flash forward to today. Well, today being sort of this week and that. We took out those highs. And as you can see, really sort of starting to sort of chew down here a little bit. Look, it is a little bit off the highs. So if we have a look on this other chart here, it gives us a better idea of it. But you can see we're still above the 38%. So it's still a long way to go if this were to be the sort of turnaround here. And given what we've just sort of looked at with it all, there's also likelihood that this could come down here and then have one more big drive up over here as well. I wouldn't put it out of it, particularly even if you were trading these sort of channel breaks. You generally get your first back test, which if we get onto a lower time frame, you can see this worked quite well. We had the break, we had the back test, lower low continuation moving down. I would say that we probably look a little bit more sort of cooling. You need to honor the fact that this has broken this channel. It's done its back test and the lower low. Obviously, we had a bit of a horizontal through here. Even as it tried to rally up, you can see sellers are like, yep, cool, that's enough for me. I'm going to try and get out of these parts here because you can see support through here. There would have been people trying to buy this area through here. They tried to sort of force it back in. They haven't. They've obviously gapped down. Excuse me, closed that gap. So we don't have any reason to sort of stay up here because remember, if we leave those gaps open, that's always going to be a pretty strong magnet for later on. But now this gap's closed, so the only gap we've really got available is this big election gap. And I do believe this will fill. Though, as I said, I believe we'll probably see a little bit of a further cooling on DXY, sort of maybe down to these lower levels, maybe around the 38 or so. Look, this isn't exact. This is just saying, look, it could come here, it could come all the way down here. It could go to, close the election gap in this move. I don't think it will, but I'm looking at something maybe like this, and then you move down over there. And I'm really sort of thinking that we got to sort of target this election gap over here. We got NFP coming out at the end of the week. It's going to be an interesting one, this one, because last month we had like abysmal 12,000 jobs or something like this. But I think pretty much the market didn't super react to it in the sense of like such an incredibly shockingly low number. And I think that's because they sort of chalked it up to the fact that there was large sort of hurricanes and that in Florida, and apparently that affected the whole country. But I know sort of Florida does account for quite a large sort of part of the sort of jobs created, apparently. But yeah, so anyway, the market didn't sort of go crazy for that 12,000. It wasn't like, oh my God, let's hit the panic stations. Month prior to that, I think it was about 212, 220 or so, so quite strong. So I think this Friday is going to be quite telling for it. If we get a strong number, I reckon that's going to be an excuse for people to move back up like this. But again, if we look through these periods over here, I took a couple of the markings off over here. We had a period through here, Jay Powell mentioning stuff, market sold into it. We saw a little section through here where I think that was like Ukraine or something. I can't remember exactly off the top of my head now. Oh, that's right. Ukraine shot the missiles into Russia. Obviously, market sold into it. Yes, we did have this larger move up over the top over here, but as you can see, these areas through here, right up the top, they sold into it. I can't remember exactly the gap of this point here, but enough for them to gap it up. The market didn't even think about it for a second. They didn't even try to really push it up. Little top thing just to close that gap, and markets sold into it and sold into and sold into it again. So my feeling is that sort of like if we get a strong NFP print, that could be the excuse that the market's looking for to go, whoa, you know what, the Fed's definitely not going to cut. Let's go up like this. But I do imagine, given these more previous ones over here, given the fact that we have broken this, channel, I think that that would just be a bigger second retest of the underside of this channel, and the market would just use that to sort of sell into, and that would be probably the final ditch in this kind of move with it all, with DXY, and at least enough to sort of target this area over here. So there's a lot of sort of moving parts of things going on at the moment. I mean, the big sort of thing really that everyone seems to be talking about is just obviously Trump and the tariffs and all this kind of stuff with it as well. So 2 6. Yeah, the tariffs as well. And it's interesting how this is sort of playing out at the moment because remember, he's not in there for another couple of months as well. So it's all a bit sort of like getting ahead of the curve and that. And this is why I believe that a little bit of this fluff will come off the top and that a little bit. But, when he announced the tariffs, I think it was this week. Maybe that was with the gaps for these areas over here. I can't remember exactly. But, the bigger tariffs seem to come from Mexico and Canada. And based on the idea that yes, we're going to stick high tariffs on you till you stop the migrants coming in. Okay, that's great, whatever. But the big takeaway one was that it was only 10% tariff against China. Maybe a 10% additional tariff on other ones that they've already got or something like this, but certainly wasn't the 60% that he'd been touting. And I think that's kind of telling of these things that, everybody's like, oh my God, the tariffs are going to be huge and it's inflation's going to go back up a thing. And then you'll see people put up the charts of 1970 and, oh, I see inflation went up to 15% and all this kind of jazz. But when he actually enacts a couple of these things, well, it's not the 60% that he said he's going to put onto China. It's actually only 10%. And it's still not even right now. So, I just think a little bit of this stuff's a bit overblown. And so, even for a decent level, I think DXY should be able to sort of come back, possibly into the end of the year. We'll have to sort of see, but back towards this sort of 103.50 area, close that gap, and then sort of see what's going to be happening from that. I mean, look, even if this were to be going higher, a pullback to close that gap would be a perfect excuse to really, just burn off a little bit of the sort of the long positions that were in there, reset, and then go up there. I mean, as I said, I'm not really a big sort of Elliott wave person, but maybe that could be your leg one, your leg two, and then maybe that's your leg three. Because a lot of people are calling 109s. I've heard some people call them 115s and shit. I don't think that's going to happen. I think they're getting a little bit ahead of themselves. But that is a plausible structural setup to give you a move back up to the 109s and really test. Where was it? The levels that we had were just a couple of years ago. Was it 21 or something? End of 22, just 2 years ago. So there's a reason to sort of think that this could play out like that, but I'm not looking for a 12-month outcome look. I'm looking for something that we can use this week and this month and into the end of the year and hopefully in the new quarter, the new year as well. So we'll see how we go. But I believe that sort of like, if you look at this from a technical standpoint, broke the channel, done the back test, got the lower low, had another push up, it closed the gap that was left there. They've obviously sold that down in the last couple of minutes there. I say we don't worry so much about the last 4 hours of a of the week and that, because not too many of them are at their desks and that. But this is obviously slowly moving back down in this direction over here. If we have a look on the daily here, I mean, look, it's got a little bit of room to move with the RSI there. I think it pushed down to at least around the 38 before maybe a bit of a later push up and into the end of the week. So a little bit of maybe US dollar continuation of weakness down through here, and then maybe that NFP comes in hot, and they use that to sort of drive it up a little bit. We'll have to sort of see how this plays out. But at the moment, from a technical standpoint, I think that the fact that it broke the channel, lower lows, I think that's going to have to be honoured and see a little bit more cooling. If we flip across, we've got gold slowly trying to sort of get back in there. Like, it's funny, I've been sort of playing around with different sort of styles and that, and I'm not a buy and hold sort of person. I love the idea. I love the thing of sort of like calling this bit here and getting into a position, just watching it run. It's just for me, it just doesn't seem to be my sort of best returns with that kind of stuff. I'll go in and out 1,000 times. I don't care. And this is a good excuse for this week because. I mean, I traded this long last week. This was the plan, price target and then sell off, which, we did. And of course, I didn't stick to that. So for some reason, I just decided to ignore my own plans. But certainly through this down period here, I traded this 3 times through this week. And I caught this move up through here. I caught this move up through here. And I caught this move up through here. This one, again, though, in the last couple of hours, I caught the pop through here. This was a nice move. Came up here, and I was saying, look, 60, that's the level we want to see it hold. We can see buyers have tried to hold it here before. You can see it's been, if we probably go back, you can see that it's been an area, a level in which we've referenced quite a few times. So it does have sold some significance. You can see even sort of, it was that pivot down point from, I'll put this back onto the pinpoint one. It was that pivot down point, the resistance that sort of came in on, was it Wednesday or something? I think it was. Wednesday? Yeah, Wednesday night. So you can see that this is an area that's worth sort of keeping a note on. And, if they can sustainably hold above it, then that I think opens up for this move over here. This is the plan to get the breakthrough, back test, and then go through here. I survived 2 pullbacks and then I got stopped out towards the end of the thing out of 54 or something like this. So quite frustrating because as I said, like I caught this bounce straight off the open. Up to 62. I mean, that's a decent sort of 30, almost $30 point. We didn't go to 65 straight away. We went to 62, something just here. Yeah, and obviously then sort of stuffed around a little bit. But, got that nice move. In, out, bang, on with your day. That's the way to do it. That's the way I like to do it anyway. And, I thought this is the one. Oh, here we go. We're breaking up above 60, holding here. Survived a couple of pullbacks. And of course, you spend the whole day just watching it grind, and then get stopped out lower than had you just taken the profit on the early start. So you know what I mean. It's one of those things. I just find it mentally taxing. I find it frustrating, and financially, it didn't even do better than had I just banked and walked off on. Turn my attention to something else and that through the rest of the session of the day. But I guess these are the ones that sort of like sometimes, like I was buying gold down here. I just sort of just go, nah, boom, whatever, let that go. I mean, there's the ones that run up all the way through here, but I'll trade it through and through and through. So anyway, whatever. We'll see how this goes come Monday. So pull this one off here. Look, potentially could be flagging through this little smaller period here, something similar to this. Not a perfect flag, but that does take you up into a little bit in no man's land. 2680 as a reasonable area. We can see that on a smaller sort of time frame, this had been a little bit of support and a little bit of resistance through here around this sort of 80s kind of zone. So I wouldn't be surprised if we do see a little bit of a continuation push up here early in the week. I don't think we're going to get major breakouts at this stage, but I think certainly we're getting close to actually seeing if we're going to see further more, like a bit more of this direction to the top side. Because if we pop on to, which is I think that's the other goal one here, the big thing we're kind of really looking for are these 2 head and shoulder plays, and both of them are maybe this bigger one's being a little bit negated at this stage, because obviously we pivoted and started to push up here a little bit more. So I'm still leaning towards top side move, somewhere along here, and I still think this is the area to watch above 27.15. I think if you can get up above 27.15, I'm going to be calling that the inverted head and shoulders. Oh, yes, this one grinded a little bit, but excuse me, you don't get perfect runs like this all the way on a head and shoulders. So, I think it's still in no man's land at the moment. I think the whole market, like as you can see, tries to move up. Sellers are happy to move in. Tries to move. Sellers did relinquish a little bit to get us above that 60 level, but obviously, nobody wanted to hold it into the weekend. So trust is low with that because they're not wanting to hold it over the weekend. But it doesn't mean that, given that there wasn't anything necessarily gold bearish news wise over the weekend, there's no reason why they won't just go, okay, well, we're safe over the weekend. Let's pile back into it Monday morning and start pushing and continue with that little push up there. And as I was saying, I think that sort of, sort of 2680s kind of level would be the first next little stop. That gives us probably in line with this falling resistance here as well as we can see. So some sort of little small touch in here. I think that's probably a realistic area, given that little flag that we had a second ago, and also this move up here, because where did that flag come in? I think it was 20. Yeah, so that little flag completion comes in at 82. You've got that little pivot resistance at 85, and you've got the falling resistance. This one's a little bit different off this chart, but I think you're going to find a little bit more selling. I don't think it's not done with the sell down yet. I think it'll slowly grind up here. As long as it can stay above 2600, really, 2600 all the way down here. But you know what I mean? As long as it can maintain this little grind up through here, this is going to be the area to watch, the sort of 27 to 27.20. Above that, I think it's game on. If we go back to that other chart, this one here, I think that's an area where we're going to start to see people start to talk about, hold on, wait, gold's not dead, and hold on, we may really sort of it puts it in line for potential shot at new all-time highs, or at least retesting the all-time highs, which in that stage still $70 off, decent move for gold, but percentage-wise, that's only 2%, which again, it's a decent move, but it's not impossible by any means. We're talking all-time highs. So yeah, I reckon we'll probably see a little bit of continuation of that move up through there. This is a 4 hour, a little bit hot over here, rolling over into the end of the week. As I said, I think that was mainly more people just they still have trust issues. I certainly say I've got trust issues. That's why I'm selling gold. You know what I mean? Taking profit on gold through these areas here because I just don't know when is it just going to go and do this and go up, boom. I mean, we had this dump down here, like it was already coming down, but then we had that next leg down on what was it, Israel peace talks. And that sort of gave it a smack back down here. So look, they've got everything lining up to sort of say, hey, yeah, let's run this down and let's do this larger head and shoulders pointing down to 2300. But they couldn't capitalize on that. They had all that. It was coming down anyway. It had the sort of, the more sort of peaceful talks on from the war side of things. So those things lining up say, look, you know what, it could very easily and should just continue back down over here. But obviously market pushed into it here. But I think they are still cautious, as you can see with these sell downs. That's why it's taking a few attempts to get up and move through here. But if we see that little bit of a pushback on DXY, that'll give gold a little bit of liquidity to sort of get up to these areas, test these levels. Then you see a little bit of revival. Maybe those NFP numbers come in later in the week, and maybe we see gold get a little smack back down over here. I don't think it's out of the woods yet. I'd like to sort of see it probably, as I said, above 27.15, but cautious under 2600. I think that's kind of like, okay, yeah, a little bit of danger time for the for gold bulls there. Flip across to Aussie. Aussie's still having a tough time. It got very close to that price target I had on Friday. I had my price target obviously in this little area over here. The alerts were set for, and TP's set for 34. What did we get? We got to 27. So it had been bashing its head against this 65 level, or 65, 65.08 or whatever, so many times through here. And then we got that nice push out and then sort of failed. It actually started to move again coming into the close of the week. If you have a look at this, it's almost to the last hour. it was actually looking pretty strong. So, I mean, look, you need to account for these things, but at the same time, I say you don't worry about it so much. This was moving up into a sort of bullish move. Obviously, people just, they're not, the trust isn't there over the weekend. So many headlines, everybody's sort of complaining about how sort of like, much Trump can sort of sway the market with a couple of headlines and that kind of stuff as well. I think that people are just sort of a bit like, they're worried a whole risk and that kind of stuff over the weekend. But if we don't have anything that goes completely pear-shaped over the weekend, there's no reason why you can't continue with that grind up through there. So I think that's still a plausible sort of level to be looking for to sort of get up through there. If we jump onto a higher time frame though, I think it's actually not looking too bad. Chuck it on the daily here. Obviously, still a little bit of work to do, but we've got obviously a bit of a flattening out, which is tried to do this through that after the election, smaller kind of thing here, and then obviously exploded back up here, and then obviously ever since then, DXY has been on a rip. Aussie took a hit at first, but really just consolidating the lows here. And as we can see, it's even though it sort of came back down to these lows, these lower here, and this is actually technically a lower low by like a point or whatever, but still was technically a lower low. But RSI is still pushing up. So I think if you can get above, look, I wouldn't say 37. I would say probably look, you'd want to be looking above, say 65.50, 65.55, but at least above the sort of 23. I mean, again, that's only the 23% retracement. So still very weak at this stage. But I think if you can get above this level over here, tested the 38, very plausible level. We can see that this obviously was a big sort of pivot point on that last drive up towards yearly highs. I think that's probably your target you'd be sort of looking for. And I think that's a reasonable sort of target that we could be looking for through here in the medium term. I don't think, I mean, obviously there's a lot of work to be done. And first things first, get through this falling resistance. But I think certainly if we get above, let's take this one. If we get above that 23 fib line, I think that's a fairly decent little move. Obviously, you find a little bit of resistance maybe sort of through these areas over here. But I think certainly if you can clear this little zone down the bottom here, that could take you up there. If we actually just do a little measured move on this one here. So say it was something like this. I mean, there you go. That's a measured move up into that level as well. So I would be pretty confident that we could be looking at sort of 66.40s. Remember, RBA is still very hawkish. They haven't budged at all. You just need DXY to cool off a little bit and calm down. If we see a little bit more of a sell off on DXY, obviously that's more US dollar across the board. Obviously Aussie's not part of the DXY, but if we see US dollar selling across the board, we've still got equities pushing up towards the highs. If we could see gold recover a little bit more, these kind of things are what I'll be watching for at the same time to sort of see Aussie move up over here. But I think sort of 66.48, 66.50, this kind of area through here. Call it 66.30, let's play cautious. At the 23, geez, I swear I've got some level of dyslexia. At the 38% retracement. Maybe it's just late. But I think that's certainly a bit of a reasonable play just above this level here. So let's put a little alert here. Let's play it 66.30. Play it a little bit safe. Drag this one. Yeah. Beautiful. And the reason I'm putting it just up above this and not just above this first little zone here is because we do have these wicks, which obviously this area was a bit of an important sort of support area. Plus, it actually, if we get up here, it clears all these attempts that we've been seeing over the last sort of like 2 weeks, 3 weeks or so. So we might see a little bit of Aussie appreciation sort of pushing up through here. I mean, if we can get a little bit of a push through here, this would get the RSI back up to the top. Hitting a bit overbought, coming into resistance, we maybe look for some sells, some shorts from this level over here to sort of see how much they want to sort of drive it back down to these lower levels afterwards. All right, flip along. So we've got silver. So silver, look, it definitely fought back in that. This was the wedge that we were calling on Friday. Got the nice little pop through here. 3150, that's still the main level that we're looking for above everything else. It's got this little double bottom through here, tight little bit of a range. Measured move takes you up here. Still this wedge that we saw the sort of break, and then obviously dribble it down over here. Once it sort of comes back down like this, I kind of negate using that. But I mean, for 1 point, it is still the measured move of this larger wedge that we saw up the top over here to sort of get you up over here. That's around the 33 level. So that's, you know what I mean? That's, you got to get the major breakout here, get the move back up over here, comes back in line with these sort of, resistance levels that we saw just on the way back down. So it's not going to go in with straight line, but, if we do get the break above there, that's where we'd be sort of targeting that sort of 33 level. I did actually have a look at this, and this is not really my normal time with it all. It's not my style, it's not my time frame, but we'll see how we go. And this is the weekly time frame of silver, and it's using Elliott wave, both of which are not my forte. Using that time frame or using sort of Elliott wave, but I understand the concepts of it all, and obviously here we've got your breakout, you got your pullback, very close to 61%. So it's a very deep kind of pullback in this first move here, but of course, bang, shot up and made new 12, 13-year highs or whatever it was. We've seen a pullback through this leg here, again, 61%. So it doesn't mean, it's down here, it can't sort of go further. It's also in line with this rising support. Now, these first anchor points are always a little bit sort of iffy, but these two here obviously are, things that line up with it all. So we do have a little bit of a wedge. And what we could be seeing through here is one of these three drives, which is 1, 2, and 3. And should gold get that bigger push, should DXY get the further sell-off, this is probably where you want to be looking for, because remember, in a bull market or a little bull cycle of sort of metals, silver is going to outperform gold. So if we see gold silver, which gold silver ratio I'll get to after this, we see that sort of start to break lower. We start to see these things line up. We see US dollar come off a little bit. We start to see gold run a bit. This is very much a plausible play, to sort of see one more drive up here. And then, I guess, let's fill this out. I don't really do this stuff, so you can tell I don't even have them on the shortcuts. I don't even know where to find them. Where are they? A, B, C. And then you have your sort of, I don't know how you, I'm not going to bother doing this, but it's like A, B, C. Something like this. I don't really know sort of where these would be coming to, so you don't quote me on these ones. But the idea is basically that you'd sort of see a third drive higher, and then you'd probably see a little bit more of a sustained correction. Maybe sort of, respecting this line here, maybe then coming to the highs over there, and then maybe a bit of a further pull down here. But this part's not the main part that we're looking at, because obviously this is a bit further, and this is going through till mid-year next year. But the point is that, look, it does show us on a higher time frame that we could be in for one more run. How we use it, we get back onto our time frame, where we're at here now, onto the chart that we're using. And we look at the smaller levels, and we look for the confirmations, and we go, okay, well, look, if we start to confirm on these smaller levels, that could be leading up to confirming on the higher levels. So again, 3150, that's going to break that sort of daily, sort of little area, backlog area, because if we have a look on a daily here, these are the highs, unable to get past, unable to get past. If we see an absence of the sellers here, this is your measured move price target of this move here. But once you're getting back up to 33, you'd have to see how things sort of play out. But obviously, if you see a bit of a pushback and then a further higher high, these things could start to sort of form together. Yeah, so I mean, again, look, that's kind of getting a little bit ahead of ourselves, but it is a plausible kind of play as well. We just have to sort of wait to sort of see how these things. I mean, look, maybe US dollar gets on a big another run, and metals get hammered again. But if we get the smaller breakouts, 3150 is the one that we're looking at. Then I think that's potentially where we could be going. And just looking at this here as well, we do have one of these kind of, this one here. This area through here with that double bottom, this obviously came in with a little bit of a negative divergence as well. So it really came down the bottom, clipped out the very lows of that previous one. I think I covered this on the Friday, but clipped out the very lows down here. Obviously, they're searching for stops. They want to see this thing go down here. Stops went there. Okay, bang, let's ride it up here. So 31.50 is what you're looking for. Watch X for silver squeeze to start trending. These are the kind of things we could be seeing in one more big run of metals, potentially putting in another new high, getting up around these 36 levels. If we zoom out a bit and we go back and we look at where we've seen it previously, obviously these are the areas that we just got within a scratch of before settling back down. Break through these ones, 36 I think is definitely plausible. If we get into these higher time frames, they're the ones where we'll see a bit of a further selling down. But I think we could potentially get one more push here. Just got to get out of this box that we're in down the bottom over here. All right, and flip across to China. Look, what a pushback over here as well. Right down under this level, and bang, he's pushed back up again. So look, there's a lower time limits on the weekly there. So we did have, this wedge broke, no, fall back into it. The fixings are still coming in a lot lower, so it means that they're trying to put effort to sort of get this thing down a little bit. But while US dollar is quite strong across the board, the yuan's not unaffected with this. Tariffs against China is the number one thing that people are talking about. As I said, it came in at 10% instead of 60%, so that is slightly better. Well, better in the sense that it's not as bad as it was. So I think certainly, we could see a little bit of a rolling over here. It's had quite a few attempts to get through this top area over here. We are putting in lower lows through this little area at the moment. But you really, at the moment, I think at best you probably just have to come back down 720s. 720s and then maybe sort of push back up over here. It's a bit hard to call with this one because, this is what China does. It just grinds sideways, then shifts a couple of levels, then just grinds sideways again. So, maybe we see a little bit of a sort of push back down to, around the sort of 720 level where they seem to be putting the fixings in most of the days through there. Certainly, I think just underneath, Friday's low, that's what you're looking for there. A little bit of a range here. It had to test out here. This could sort of result in a failed breakdown and push back up, or we could just see this thing roll over and come back down over here as well. So it's not a super exciting one to be watching, but it's one of those ones that, particularly if you're trading Aussie, you want to put this into the mix, because if this starts to push down here, it's another tick in the camp of Aussie potentially breaking up a little bit higher. Doesn't mean that this is going to come down over to 710 or 711 straight away, but if we see a little bit of a stronger yuan and US dollar sold off against this, that could be the same time that we're sort of seeing Aussie break out, move towards that 66.30 target that we were looking for. Maybe it hits the 66.30 target around the same time that we see some of these supports, maybe not this one here, but maybe sort of back down around that sort of 720 level. Sort of start to come into effect. So it's just one worth sort of keeping an eye on. And finally, flip across, we've got copper. Copper doing what it does. So it's heartbreak status. Look, we all know what happened with copper. It got absolutely slammed down through here. Again, look, it's just sideways. It did hold this rising support through this area here. If we get back onto the daily, we might be able to see a bit better. This sort of support coming up through here. This is where they want to hold. If you do get a bit of a breakdown further through here, we've got an earlier line here, so I'd say through 410 will be your early indicator. I don't think you need to wait till this wick's taken out. I think underneath 410 is a second attempt outside this little rising support through the horizontals. I think that'll sort of see you really probably come back down, test underneath 395 would be probably a decent level where we start to see maybe a little bit of a bounce. But certainly looking a little bit weak. It needs China to get its act together, really. And we need to sort of see that the whole Trump situation, tariff situation, isn't going to be as problematic for the whole world as possible. There's a lot of talk about the sort of BRICS and that at the moment. I saw sort of Trump come out with a couple of headlines, sort of saying same sort of stuff of, anybody, if you want to deal with the US, then you got to show us support and back us with the US dollar, and none of these other sort of things. So BRICS and all these other potential options. So look, I'd keep an eye on that, but for the moment, this is the range. I think a breakout above here is still going to have trouble coming up underneath these like swing levels. Really, till it sort of gets out of this triangle, I don't know if we're going to see much direction, but we are getting close to it because, of course, this is a large triangle through here. Really, look, this thing, they like to use it. This is the last triangle. I'll say the last triangle wasn't the last triangle. It's the one that we had just before the big break. But they really like to take it to the last little. They make use of it. I've covered copper a couple of times. Copper's very much likes to do little fake breakouts, and it likes to really eat up the whole of the sort of technical areas. And so if we do work off that, we could be seeing, maybe say a little bit of sort of short-term upside. I mean, we're coming off the base over here. If this can hold, break through this area, maybe you could see a little bit of a drive up. You could see a little bit of a drive up to test this falling resistance before coming back down through here. Yeah, I think we're sort of at the moment not really expecting a great deal. As you can see, the thing just loves to sort of consolidate at the moment. So I think it's instead of sort of like trading this area through here, got a couple of good wins, but again, fall into the camp of, oh, I'm going to buy and hold it. And it just broke my heart over and over again. And obviously, I was lucky to sort of not get absolutely annihilated through this bit because I wasn't holding. I got stopped out a little bit trying to catch a bounce, I think maybe around here or something. But, certainly that got smacked down. I mean, 10%, that's really quite damaging. So I think, look, coming off the support, if it can hold this area down here, break through here, you'll have a little bit of trouble in this lower area, but potentially, push out here. And really, I'd say sort of mid-Jan. By mid-Jan, I'd be looking for a major break, whether that be down or up. That'll have to be seen. But I think if you have to base it off a technical thing, you technically came into this larger sort of consolidation in a bullish manner. That would lead you more to favoring a sort of bullish continuation. But of course, all depends on what's happening with China and of course the US as well. All right, so I think that's pretty much it on the charts. Have a quick flip across to what we've got going news-wise. We've got the new month. All right, so look, Monday. Actually got some news on a Monday for once. We haven't had news on a Monday for ages. Retail sales up for Aussie. So, this coming in a little bit stronger. It's going to fall in one of the two camps. There's a hawkish or a dovish. That's a more hawkish sort of bit of data for the Aussie. The idea being that sort of like, because it's a little bit higher, people have got money to spend. They're obviously not hurting as much as everyone says they are. They're still out there buying retail, spending up like that. They don't need cuts anytime soon. The RBA is not in any rush to cut. They're actually by far the most hawkish central bank out there at the moment. Retail sales aren't going to change this. Might give it a little bit of a blip, but not really. I'd say, if anything, this would be falling into the camp of giving Aussie a little bit of upside push. We've got job advertisements, building approvals, a little bit of a slowdown in building approvals, but that's Australia for you. We've got a bit of PMI data out of Japan. The yen has really been picking up a lot recently, so it's worth keeping an eye on with the yen. Again, stronger yen is going to be impacting US dollar. Another reason for the US dollar to be weakening off a little bit there. A little bit more data here. I don't really follow commodity price in this sort of sense for this bit of data anyway. So nothing that's really going to be moving. We got a bit of PMI data, although it's sort of low tier stuff. This is something that's worth watching Monday night, as obviously those PMIs will sort of impact things a little bit. Monday night, Tuesday morning, Melbourne time, we got ISM manufacturing for US. So these are the ones, again, 50 is your baseline. Lower number is going to be weaker for them. Not necessarily the big talk, but the thing, particularly more in regards to the NFP that people seem to be talking about now, is if they get a really strong number, is that going to be enough for the Fed to go, you know what, we've done 2 cuts, let's let this one ride? It's a tough call at the moment, but basically only a high number will be a shock high will be the one that sort of really can affect the market. If you get a low number, I don't think they're going to do another 50. So 25 base point probably seems like where they're going to be coming in. But the ISM numbers, there's something that you can plug in there as well. Weaker numbers there, well, that goes into the idea that they need to help stimulate more. And if they need to help stimulate more, well, that's going to be more in the sort of weaker US dollar camp. A couple of Fed speakers in the morning over there. I hate this time of year with the tradings and with the hours. It's just all over the place, and we don't get volume till sort of lunchtime. Um, Moving through, look, nothing great deal Tuesday through most of the day. Jolts, so Jolts fairly flat, slight tick up. So that's obviously job openings and that. Again, job openings. You're advertising when you're feeling good. High numbers, good for the US dollar. GDP for Aussie, slight tick up here. That's good. Positive move on the Aussie. If we get the data coming in this here, that'll support strength with the Aussie. I think with the Aussie, really, you just need those technical levels to break, and that'll come in conjunction with obviously if we do see a bit of a cool off on the US dollar, and if we get some strong Aussie data. If we have those things combined, and then if you have on top of that maybe copper moving a little bit, equity stay bid, these kind of things, that'll be the sort of secret sauce for the Aussie to get a little bit of a leg on. Bit of Caxton Services PMI. So you got China over here. Again, look, most of the stuff reasonably strong, but no sort of shockers through here. ADP. Okay, so ADP, it's one of these funny ones where some people say it can be a precursor, but I would say more often than not, it's got no bearing on what the actual number ends up to be for NFP. So look, a weaker one here, again, weaker US dollar because they're going to need to sort of do something to stimulate that stuff. US dollar is really, it's running on the Trump thing, but it's also running on the fact that they've actually been producing halfway decent numbers with their economic stuff. So, if you see a kink in the armor in that sense, that could be seeing it slow down. It's quite strong numbers with the services, the PMIs there as well. Moving forward, you got power talking. Apparently, this is the last talk before the blackout period. Got unemployment claims. Again, pretty flat. Nothing super exciting here. And then, of course, NFP at the end. So, I mean, again, I've already covered. You don't really worry too much about last month, so it's ridiculous. So you kind of skip last month, go to the month before. 254 revised to 23, and then obviously 12, whatever. But they're expecting a slowdown anyway. So we'll see how this sort of comes here. But I think massive number here is what's going to get US dollar springing back up. But I'm really going to be paying attention to how the market acts towards all strong bits of US data. If they use those strong bits of US data to just sell into, I think that's going to be very telling. And I think that's the point that you start to think, well, what happens if they're selling it on good data, what happens when they get bad data? That's going to really hammer it. That's something to look out for. All right, that's it for me.